I'm Eric Schurenberg, editor of CBS MoneyWatch. We're here at the Morningstar Conference, and I'm here with the Managing Director of Morningstar, Don Phillips. There is no one better positioned to give an overview of the mutual fund industry. He's been following the industry for more than 25 years at the helm of Morningstar. Don, thanks for joining us.
You bet, Eric.
You gave some congressional testimony about 6 years ago, and a point that was really the depth of the mutual fund industry's reputation with investors. Financial services in general have a pretty tough uphill climb to go, reputation-wise. Would you give me a report card on the mutual fund industry since then? How's it been doing?
Well, I think the industry is doing better. I do think that it lost its way, and they lost the focus on the individual investor. At the end of the day, it's other people's money that you're talking about in the mutual fund industry, and you have to have respect for that. The good thing that came out of the scandals in the industry is that there was a huge penalty to pay for those funds that misstepped. Assets were taken away from them, financial advisors moved their clients' money away, and people that for their whole careers had been much admired, they left the industry in disgrace. Some of them were barred for life from the fund industry, and it's at such a huge penalty that it shook the whole industry. And I think you have to remember, this is an industry that always saw itself as wearing the white hat. Throughout the 80s and 90s, if there was ever an article about personal finance, mutual funds were always positioned as the good guys, the ones you could trust, what you would go if you wanted to participate in these markets, and then the industry let investors down. And they paid a price for it. The good news, in my opinion, the industry's been on its best behavior in recent years. We've seen costs coming down, we're seeing transparency going up, and more of the products that are coming out today are designed as solutions for investors, as opposed to what I thought to be more of an arms dealer mentality in the late 1990s.
What do you mean by that?
What I mean by that is, when people were rushing out with internet funds and things like that, and they'd say, look, we know this probably isn't a good idea, but hey, the public wants it. Right. We just make these funds, and what people do with them is someone else's responsibility. And that to me is the arms dealer mentality. And I think we've moved away from that notion of salesmanship. If we had a fund like this today, would it be easy to sell? And we've moved more to a culture of stewardship in the industry, which would say, if we sell a fund like this today, how are people going to think about us 5, 10, 15 years down the road? And that's really the important question to ask.
Well, that's good. Well, that really is a change. Let's talk about innovation in the fund industry. How about things that have come out recently? Alternative commodity funds, alternative investments, how are they doing in the mutual fund industry?
Well, on the one hand, it's a great thing because the toolkit that investors have has gotten exponentially larger. And today, the individual investor has the ability to do things that a decade ago only the biggest institutions could do. So that's the good thing. The problem is that these tools, they're more powerful, and they do have that potential for misuse. And so it's a two-edged sword. But I would say the idea of alternative strategies coming out through mutual funds, on the whole, is a very good one if it's done, approached through the lens of diversification. That this can give investors something that will smooth out the returns that you can get from the stock and the bond markets and give you a smoother path towards meeting your goals.
Okay, will you name some kinds of categories of funds that you think are advancements?
Well, I think a lot of things in the alternative space, things that are long-short, things that take some of the rough edges off. Emerging markets would be another area that's a big innovation. Again, an area where you'd be very hard-pressed as the investor to go it alone in that area. Try to do your own research, try to transact, make the transactions. I like some of these funds that are coming out that are forward-looking, trying to help investors protect against inflation. And I think that's something that's a good innovation from the fund industry. It's a legitimate need that investors have, especially those in or near retirement. You need to be worried about inflation, and we're seeing some offerings come out that have a very diversified approach to that. So as opposed to 20 years ago, people would say, if you're worried about inflation, just go buy a gold fund. Well, now you can take some of the rough edges off and you can have a little bit of gold, but you could also have some real estate, you could have some international commodities or currencies, and a broad basket of things that could protect you against inflation.
Okay, good. Well, speaking of financial innovation, you had an announcement today about analyst ratings for mutual funds. Tell me about that.
Well, we think of this as sort of the next evolution in our fund research. And we've done analyst text on funds for over a quarter of a century. But what we've done now is we're launching a new rating that'll come out in this fall that's based on the analyst assessment of how good a fund is relative to its peers. We'll continue to have the star rating, which looks back at performance and historical risk, and we view that as an achievement test. It tells you what the fund's done to date. But these new analyst ratings that we're launching, we view these as an aptitude test. It looks at things beyond performance. It looks at the stewardship culture of the organization. It looks at the tenure of the managers. It can look at their track record at other funds with similar mandates, and it can bring that additional information that our analysts have into the evaluation evaluation of a fund, and we hope that it'll help investors concentrate their research on funds that really have the most merit.
One of the pillars in these analyst ratings is performance, which seems to me a difficult area. It's very hard to forecast.
Absolutely.
Performance, we often warn about that at CBS MoneyWatch. You can't really, certainly can't project the past into the future. How does that work in Morningstar's analyst ratings?
Well, with these analyst ratings, one thing you'd have to argue about this is that we're dialing down the performance significantly, and that performance is just one of 5 Ps, the others being process, process, price, people, and parent. So performance now is just 1/5 of the overall assessment. And then within performance, I would point out that risk levels are a part of performance. When we think of performance, it's the returns plus the volatility. And risk levels are something that you can take from the past and project into the future with greater certainty than you can raw performance. Raw performance, there's a long-term tendency of regression towards the mean that's very powerful. However, risk is something that's more of a conscious matter of choice for a manager, or if you're looking at an index fund, how the index was designed.
All right, good. But the permanent things, you really can count on the risk approach a manager takes, the stewardship the company has, the care they take of shareholders, and price, whether it's an efficient company or not.
Those are very important things, and within the stewardship, one of the things we're spending a lot of time looking at is a manager willing to have skin in the game? Will they invest in their own fund? And sadly, in the United States, most of the funds out there, the fund managers don't have a penny of their own money in it. But those managers that do commit money to their funds, not only do they tend to have better performance, but they have lower cost and they have lower risk. We like to use the line in Morningstar that no one washes a rental car. If you're just a hired hand on the fund to run it, you're not going to have the same care as if you've got your own money in it. And that's something we pay a lot of attention to and will pay a lot of attention to in our analyst ratings.
Well, the Morningstar star ratings have been the gold standard of mutual fund rating for a couple decades now. I'm very interested to see how the analyst ratings do. Don, thanks very much.
Thank you, Eric. Pleasure.
And thanks for watching.